So, when you think about risk in crypto, what's the first thing that comes to mind? Probably the price, right? The wild swings. But what if I told you the biggest risks have nothing to do with the charts at all? Today, we're going to unpack two hidden dangers, one that gets to the heart of an investor's personal faith, and another that's all about the clash of global superpowers.
Look, it's easy to get glued to those price charts, watching the crazy ups and downs. But that's not the whole story, not even close. We're about to explore the risks that are hiding right in plain sight, from the deeply personal and ethical, all the way to the massive and geopolitical.
So let's start with that personal lens and dive into a really critical debate that's happening right now inside the global Muslim community. You see, for millions of investors, the number one risk isn't a market crash. It's an internal one. Does something like crypto staking actually line up with their faith?
Okay, so first things first, what is staking? Well, in the simplest terms, you're locking up your coins to help a network stay secure and validate transactions. And for doing that job, you get rewarded with new coins. The source material we looked at put it in a really great way. It's less like a loan and more like getting paid for a job you're doing for the network.
All right, now to really get what this debate is all about, you've got to understand a few key principles of Islamic finance. First, there's riba. This is a big one. It forbids earning interest from loans. Then you've got gharar, which is all about avoiding crazy amounts of uncertainty or ambiguity in a contract. And finally, there's maisir, which prohibits pure gambling or speculation. Any investment has to pass these tests.
And that's what brings us right to the heart of this huge debate. So, on the halal side of the argument, the side that says it's permissible, the thinking is, hey, this is a payment for a service. It's not a loan. You're taking a real risk, and the rewards aren't guaranteed. But then on the haram side, the forbidden side, people argue that it looks an awful lot like interest, that the wild volatility could be a form of that excessive uncertainty, and hey, who knows if the project itself is funding something that's not allowed?
So, if you're an investor trying to navigate all this, what do you actually do? Well, the source lays out a pretty clear three-step plan. First, you've got to research the project, like what does it actually do in the real world? Second, dig into the mechanics. Is it really staking, or is it just a lending product in disguise? And third, and this is probably the most important step, take what you found and discuss it with a trusted scholar. This is all about deep personal due diligence.
Okay, so we've just looked at a risk that's deeply personal, something you can, to some degree, control with your own research and faith. But what about a risk that's completely out of your hands? One that can come out of nowhere and just wreck everything. That's right, we're shifting gears now from the micro to the macro, from an internal dilemma to an external shockwave that can shake the entire market to its core.
What you're seeing here is basically a perfect storm in 3 steps. It all kicked off when China announced it was restricting exports of some really key minerals. And the US response? Bam! They announced these massive tariffs on Chinese tech. And just like that, the fear of a full-blown trade war sent investors running for the exits. They started dumping anything they thought was high risk, and yeah, that definitely included crypto.
And this was the number that lit the fuse, a 100% tariff. You have to understand, this wasn't just another headline. For the markets, this was basically a declaration of economic war. The signal was unmistakable. Things are escalating and fast. The panic selling started almost instantly.
And the damage? Absolutely staggering. In a single day, $560 billion was just wiped off the crypto market. That number just shows the unbelievable scale of the fallout when something like geopolitics spills over into our financial world.
But behind that massive number, there's a human cost, and it's huge. We're talking about roughly 1.6 million traders who were liquidated. That means their positions were just closed out, their money gone. This wasn't just numbers on a screen. This was a financially devastating event for a ton of people.
And make no mistake, no corner of the crypto market was safe from this. Bitcoin took an 11% hit, Ethereum dropped even harder, down 14%, and the altcoins, they got hammered, dropping 18%. This wasn't about one bad project. This was market-wide carnage. It was a brutal reminder of just how plugged in crypto is to the big global economic machine. But wait, because here's where the story gets another layer of complexity. The news was the trigger, sure, but an internal market problem was like pouring gasoline on an already raging fire. See, analysts point to this hedge fund strategy called the cash and carry trade. Now, without getting too in the weeds, it's basically a bet on the price difference between crypto now and crypto in the future. It's supposed to be a low-risk trade, but when the market started to panic, that safe trade completely fell apart. And that forced these huge funds to sell off their crypto all at once, which just accelerated the crash into a nosedive.
Okay, so we've just walked through two completely different kinds of risk, right? One is personal, it's about faith. The other is global, it's about politics and economics. So what does it all mean? When we talk about risk in crypto, what are we really talking about?
And this is really the key takeaway. You have to look at risk through at least two different lenses. You've got the ethical lens on one side. Here, the risk comes from inside, from your own principles, from the project's fundamentals. It's personal, it's moral, and you control it through your own research and consultation. And then you have the geopolitical lens. The risk here is totally external. It's systemic. And honestly, it's almost completely out of your control as an individual.
And that really brings us to the bottom line. If you really want to understand this space, you have to look beyond the price chart. It's so much more than just code and numbers. It's this incredible, complex system where ancient principles of faith can clash with modern geopolitics and just raw, unfiltered human behavior. That price you see ticking up and down, that's just the final echo of all these other massive forces at play.
And that leaves us with one last really big question to chew on. You know, in crypto, you hear it all the time. Code is law. The rules are baked into the system. But what happens when the laws of the code clash with the laws of a nation? Or when they clash with the deeply held laws of someone's faith? When those laws collide, which one wins? Now that might be the biggest risk of all. Thanks for tuning in.